Hello guys, thank you very much for joining me. It's Premarket. I would like to welcome you to the 2020 session, and I would like to wish you all a very prosperous new year. I just hope that 2021 will be a different year for all of us, and it will be filled with positive stuff, and will be filled also with the recovery from everything that we've been going through. So without further ado, let us go on to our order of the day. So we'll be looking at the euro, at the USDZar, and if you haven't watched it, please click on the link where you can see the Euro USD analysis that we have just done in the previous video. So again, since it's a new year, what we're going to do is we start off with the monthly analysis. What we'll be expecting is that since the price made a higher high, coming off a lower low, we'll be expecting the price to establish either a higher low or a lower low. So this is a zone where we're going to be seeking to be very cautious. So what we'll be expecting is it's either the price is going to continue moving the downward trend as signaled by these three bearish candles. I like to call them the three black crows, which is signaling that the bearish trend is likely to continue. So what we'll be expecting is that the price may continue downwards and establish a lower low, and then seek to reverse or to pull back and establish a lower high, from which it will then extend the downward trend, going in series of lower lows and lower highs in a downward trend. Alternatively, what may happen is that the price may establish a floor or a higher low from here, and after it has established a higher low, we would know that the price is going to go all the way up and probably close above the previous high. So these are the two scenarios that I'm expecting, or the movements that I'll be expecting in the coming months as far as the monthly analysis is concerned. And then now we move on to the weekly analysis. What I'll be expecting is that since the price is formed inside bars here, we can see that this is an inside bar pattern. It's a sign of consolidation. So what I'm expecting is that the price is consolidating, either to form a lower high or to come and retest this 15.21600 zone, in the process forming a lower high before moving all the way down and breaking the 14.39096 zone. Alternatively, if the 15.21600 zone fails to hold as a resistance zone, the price is then going to break this zone and then come retest it and then move in sequences of higher highs and higher lows, moving back to 17.69100. So these are the two scenarios that I'll be expecting as far as the USDZar is concerned in the week on the weekly chart. So we now move on to the daily chart. So on the daily chart, what I'm expecting is, as you can see, there is a formation of a rising channel. So what I'll be expecting is that I'll be expecting two scenarios. I'll be expecting that the price is going to break out of the channel and then retest the zone before going all the way down to 13.6440. Obviously, it will do this in series of lower lows and lower high. Alternatively, the price is going to form a double bottom, right? So it will move here and then come and form a double bottom before going all the way up to maybe test the 15.35343 zone. So these are the two scenarios that I'm expecting on the daily. But remember that because of the confluence or because of the support that I have from the weekly, monthly charts, and also the prevalent trend, which is bearish, I'm not going to partake in any bearish positions, since from my methodology and from the way that I've looked at things, I'm still expecting that downward trend to be prevalent. So hence, I will only participate in bearish events or in bearish positions. So thank you very much, guys, for joining me for this first analysis for the year. So as you can see, we'll still keep things the same way. We'll still do our analysis the same way. It doesn't matter that this is a new year. the markets will still move the same. The analysis that we do is still the same. Yes, there are refinements that are done here and there, but basically we do the same things. So the same things happen over and over and over again. So what we just need is the mentality or the mental strength to compose ourselves and take advantage of the opportunities that would have been presented by us, and to avoid seeing things that are not there. We have to see the things that are on the chart, because remember, you have to trade the price, you have to trade what's there. You don't have to anticipate anything. You don't have to predict stuff. So what we are doing is we just are reading stuff. So when you see, that's why you see that I usually don't have the bias that I have will be in terms of my methodology, that okay, I want from the way I look at things, the bullish positions will have a higher probability, but I don't rule out the possibility that there will be bearish moves. So it's only that I decide not to partake in bullish positions if they have a lower probability, but I'm not ruling out the fact that they might be there. So that's the art of seeing things, seeing the price as it is. So remember, as I told you even in the last video, that we have to make survival our primary goal. So this year, let's make survival our primary goal, which means that we're going to be very strict on our money management. We are also going to be strict on our methodology, on executing our methodology. So this is the way that we can stay in the game. Last year, I wouldn't want to lie to you, I blew up, I think, about 2 or 3 accounts. Yes, it happens. It's common. Everyone else does that. He has blown 1, 2, 3, 4, 5, 6, 7, 8, 9. But I made sure that I never lost something that I wasn't comfortable losing. So that's why I don't give a damn when I lose, because I'm prepared to do that. All right. So ladies and gentlemen, thank you very much for joining me. It was a pleasure having you in this first episode of the 2020. I just wish you a prosperous 2021, and I just encourage you to keep grinding with grit so that we conquer this craft, or we master this craft. Thank you very much, ladies and gentlemen. Roy Machingura out.